Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that the market has now just broken above a quite strong level. In fact, this was acting as previous monthly support here, then the market broke it to the downside. However, instead of then respecting it as resistance here, the market broke back above that zone. So now this previous support that was supposed to be turned resistance and failed has turned into a level at which the market has created a fake breakout, because at this point, this move to the downside is a fake breakout. And when you have a fake breakout, you usually then expect a retest of the level and a massive move to the upside. So from a monthly perspective, what we could expect is some short-term bearish price action and then longer-term bullish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the situation is quite clear. We have a textbook uptrend with the market creating higher highs and higher lows. We can see, in fact, how from here we had a move to the upside, correction, printing the first high. Then here we had the first low. Then we had a higher high here. Now we just had a higher low. And now the market just printed a new higher high. So also here on the weekly, what we could expect is a short-term correction and then more bullish continuation. Essentially, the creation of a new higher high, a new higher low, and then a higher high once again. So monthly and weekly both seem quite bullish. We can also notice how from a weekly perspective, we had the perfect test here of previous weekly resistance turn support. So the market is creating structure and respecting it exactly as you would usually expect in a situation like this. Going down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about USDCHF just a few days ago when the market was around this area and explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, at the moment, what do we have from a daily standpoint? Now, before we go deeper into the technicals, from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. Now, first of all, let's analyze what is going on the CHF. Now, keep in mind that if we're looking at the CHF, we are already looking at CHF USD because every currency on the spot is traded against the USD. So this is what institutions are doing on CHF USD. But since we're analyzing USD CHF, we simply have to reverse everything. And what we can see here is that net positions with the last reports went from minus 3.4K all the way down to minus 17.8K. So institutions have been aggressively shorting the CHF, decreasing their net positions. Therefore, USDCHF has been getting stronger because institutions shorting the CHF means that actually they are longing USDCHF. And what we can see here is that with the last reports, in fact, shorts have been increased. We went from having 11.8K shorts up to 29.1K shorts, and longs got decreased from the high here at 16.9K down to 11.2K, which means that institutions have been increasing their longs on USDCHF and decreasing their shorts. Therefore, USDCHF has definitely been stronger, getting stronger because institutions are shorting aggressively the CHF. Now, keeping that in mind, let's move back to the technical side of the market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also linked in the description, so you never miss new updates. Now, back to the chart. Here on the daily time frame, what we can notice is that clearly we had a quite strong impulse to the upside. In general, after an impulse, you would expect first a correction and then more bullish continuation. Now, if we want to measure a correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And what we can notice is that we have the 0.32 50% and 0.618 Fibonacci retracements lining up exactly with this previous level of daily resistance, which is now turned support here. So what we could expect in a situation like this is a retest of previous resistance turned support and then to see a potential push higher away from this zone. And since this level is confluence of support, because we have the Fibonacci levels inside of here and also this previous resistance turned support, we could expect inside of this level more institutional shorting of the CHF, therefore institutional longing of USDCHF, which at that point could further increase the probabilities of a potential push higher away from the level. So if the market will retrace to this zone, what would I expect in a situation like this? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher away from this confluence of support zone. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.